Yeah, it's your boy Crypto Blood. Welcome to another episode of My Two Satoshis. Yeah, DMX, that's my favorite. Give a shout out to Haru. He requested me to play that DMX Ain't No Sunshine. This is off that Exit Wound soundtrack. This was a classic. Thank you for the song request, Haru. What's going on, people? Hope you guys are doing well today, hanging in there. Today we're going to be talking about two items that caught my attention. One I had actually pinned yesterday and wanted to talk about, and the other it came across my desk today. I'm like, yeah, let's talk about this. The first being Venezuela. They are taking their Petro token, that Petro crypto token that they created, a step further. I'm going to explain why and how, what they're going to be doing here. They're pegging it to their own fiat currency, the Bolivar, and wow, this really takes it another step further as far as telling the rest of the world, really primarily the US, they don't care and they're moving on. And maybe this is their trailblazing. Maybe this is a pattern we'll start to see with other countries that the US has issues with. So we'll see what happens with that. I thought this was an interesting article. The second article is really about Coinbase and how they've seen an almost 85% drop in trading volume year to date. And we'll talk about why, and I'll give you my two Satoshis on why I think that's happening. But first, we're going to check out what's going on with that market cap. And currently we are at $209 billion, just barely above that $200 billion mark. Bitcoin's dominance is at 53%. And we look hour to hour here, not too much of a change. And in the 7-day view, we're still up on most of these coins, but we've kind of paired some of those gains a little bit. But overall, we're still in the 7-day view, still up pretty well with most of these coins. We had that pop off of that low of 6,000 area in Bitcoin. Really nothing to talk about here with the technical analysis. We're still trading kind of in the same area we were yesterday, and really if you want to talk yesterday and the day before. So nothing really here. Still need to see that action above 6,600. But as you can see, I'm going to zoom in really quickly before we move on to the first article. We haven't made new lows. So we've got 6,200. It's kind of an area of support right now. And this is on the hour chart. So we're not making new lows, but we're also not making new highs. So if we can keep this, and I'm just going to draw this really quickly. If we keep this area, it's not a perfect line, I know, but let's just say, you know, this is kind of the resistance area at 6,600. Well, if we do this, we may do something like this and then finally explode up. We'll see what happens, people. We'll see what happens. I'll make sure I save that just to have that as a reference. But on to the actual article. The first one is out of CCN. Coinbase trading drops 83% since January. Offshore cryptocurrency exchanges make gains. And I'm just going to say this before we get started. Probably one of the reasons is because Coinbase used to have one of the lowest fees in the industry as far as on the Pro or GDAX side for active traders. But now it's so much competition. Binance, KuCoin, I mean the list goes on and how many exchanges are beating them in their fees. 0.3% per trade on Coinbase, insane. While you compare it to Binance at 0.1%. Now I was talking to a guy in the trading room. He uses Coinbase Pro, and he does make a point that the limit orders, basically you being a maker in the market, the limit orders are free, so that is one way you can get around that. But if you got to execute a trade right then and there, you're dealing with an algorithm or something like that, when you need that trade executed, it's going to be 0.3% versus Binance 0.1%, and actually it's 0.05%, I believe, with Binance if you're using their token, their Binance token. So I think that's probably the main reason, but let's take a look at this article and see what they say. So it says here, cryptocurrency exchange giant Coinbase might, as market research firm Bernstein recently said, be on the cusp of assembling an insatiable market share in the U.S., but that doesn't mean that the San Francisco-based firm isn't struggling to maintain consumer activity during the current downturn. Citing data from Coin API, crypto asset research firm Deere reports that U.S.-denominated cryptocurrency trading has plunged in 2018, even as large cryptocurrency to cryptocurrency exchanges headquartered in other parts of the world have seen stable or even rising volumes. According to the publication, Coinbase, the most well-known cryptocurrency trading platform in the U.S., has seen volumes plunge by 83% from their all-time high in January. In July, Coinbase processed an estimated $3.9 billion worth of trades, down from a peak of nearly $21 billion, which that's crazy. Bitstamp and Kraken, both of whom offer USD trading pairs, have also experienced significant declines, though they have seen less pronounced than those seen on Coinbase. Binance, the world's largest order book cryptocurrency exchange, has also seen a moderate decline in volume in its BTC, ETH, Bitcoin Cash, and Litecoin markets, the four cryptocurrencies that have been available on Coinbase throughout 2018, from 17.5 billion in February to a low of 9.4 billion in June. However, Binance volume jumped 21% the next month, reaching 11.3 billion in July. And so we've got OKEx, Bitstamp on here as well. Meanwhile, OKEx, generally the second largest cryptocurrency exchange, attracted a surge in trading volume, these four large cap coins, between June and July to 5.7 billion from 2.9 billion. That not only signifies a month-over-month increase of 97%, but also, Dire reports, represents a new monthly record for OKEx. That's particularly notable since volume on Coinbase and Bitstamp decreased between June and July, albeit slightly. Incidentally, neither Coinbase nor Bitstamp supports USD-pegged stablecoin Tether, while both OKEx and Binance do. Tether, whose solvency and credibility have been the subject of much debate within cryptocurrency community, has issued hundreds of millions of dollars worth of new tokens over the past few weeks, which could help explain the discrepancy in volume between exchanges that support USDT and those that do not. Additionally, both Binance and OKEx, as CCN reported, are planning to set up shop in Malta after pro-industry regulatory laws go into effect in the self-described blockchain island later this year. Binance, which has only offered crypto-to-crypto trading, has also unveiled plans to partner with Liechtenstein-based company to begin offering its first fiat trading pairs. So what do you guys think? I think, you know, probably what's going on is that Coinbase is going to be, or has already set the framework up to make much more money with the institutional funds and traders than the consumers, you know, the retail traders, that they probably don't care. You know, they can keep at 0.3% and still do fine, even if volume comes down. Part of that is because, you know, we've come down from those highs of $20,000 Bitcoin. That surely doesn't help. But when that happens, when people kind of wake up and see what's going on, they start looking for bargains, and I think that's probably what's going on. People are heading over to Binance, OKEx, KuCoin, a whole bunch of other ones that are doing decently well also. You guys let me know. I personally think Coinbase fees are just entirely too high, but some people, even in the trading room, some people prefer going back and forth with US dollar, the real fiat currency, versus using Tether. I personally have no problem with Tether. It's been around, the rumors and all that stuff. It's been going on for quite some time, for some years now. And I think really it's a perception thing. Like, if everyone recognizes Tether as, whether they have the dollars to back it or not, if the market doesn't panic, and I don't see a reason for them to do that, Tether will continue to be a source of liquidity for going from fiat back to crypto. You guys let me know your thoughts on it though. Interesting article, I thought. It's probably going to be not so bad once the markets rebound. I think that we see a bump, but probably not take as much share as they had prior to this downturn, because people are starting to realize the fees are kind of crazy over there at Coinbase. Second article is out of CoinDo. This one is really what I wanted to talk to you guys about. Venezuela Bolivar to be tied to petro cryptocurrency. So this is the third time I've covered this Venezuelan cryptocurrency token they created called the Petro, and that is backed by barrels of their oil. So let's see what they're doing now. Venezuela's president announced that it will implement a new economic reform which will peg the country's bolivar currency to the state-backed petro cryptocurrency. Nicolas Maduro, the president of Venezuela, stated that this plan will require the bolivar to go down from 285,000 per dollar to 6 million, which would signify a devaluing of 96%. Venezuela's inflation is expected to reach 1,000,000% this year. This is insane, people, but it is yet unknown how Maduro's approach will alleviate this economic crisis. The currency reform will also be involving higher minimum wages, corporate tax rate increases, and bigger gas price subventions. He says here, the president, "I want the country to recover and I have the formula. Trust me." Wow. They've dollarized our prices. I'm petrolizing salaries and petrolizing prices. I don't know what he means by that, but he says here, we are going to convert the petro into the reference that pegs the entire economy's movement. The president goes on to say, we are going to convert the petro into the reference that pegs the entire economy's movement. What value does the bolivar have in Venezuela's hyperinflation? The petro cryptocurrency was issued by the state earlier this year with the initial intent of complementing Venezuela's plummeting currency, bypassing U.S. sanctions and allowing access to international financing. Cryptocurrencies are known for their massive price fluctuations, with Bitcoin going from a December's high of 20,000 to 5,000. To avoid such volatility, the petro was backed up by the country's oil reserves, gas, gold, and diamonds. But this tethering has been questioned and dismissed by most of the cryptocurrency world. Just to stop there, the problem with any physically backed cryptocurrency is that you still have to trust that you still have to trust that counterparty. You still have to trust the person issuing the tokens, hoping that those tokens fully represent that commodity one-to-one. Normally, and this is just what human nature is, it normally does for a time, but at some point they will realize and see how much redemption is actually going on for those physical commodity backed tokens, and then the people issuing those tokens start to, kind of fudge the numbers, right, and start issuing more tokens than there are the commodities backing them. So it just happens every time. I don't think we will see, unless there is some type of physical tracking device that can be placed inside of these commodities and tracked and serialized to a token. That's the only way. And even then, of course, we know there are some ways that they can get around that, but that's why I'm not a fan of any type of proposed commodity backed token. It just doesn't make sense to me. But anyway, the article goes on to talk about how almost immediately after this launch, the U.S. President Donald Trump released an executive order which banned American residents to make any investment in the Venezuela crypto. The Weiss cryptocurrency ratings expressed its belief that Petro was destined to fail and that it lacked any explanation as to how the cryptocurrency would be pegged to oil prices. So this guy, Juan Villaverde, actually said, we now have the first ever state-sponsored cryptocurrency, but it's not exactly time to celebrate. Yeah, I hear you. The Petro is a worthless token that may or may not be usable for paying taxes in Venezuela. So yeah, the execution of it, I'm definitely skeptical of. But this is what I'm talking. You have to watch these types of events because they're just a precursor to what we're going to see as things start to fall apart globally from a financial situation or standpoint. Usually the first one out there that does it isn't the best at it. So this will be used, though, by other countries watching, and believe there are other countries watching this. They will use this as a blueprint to roll out their own state-backed cryptocurrencies in the future, whether it be just a state fiat cryptocurrency or if it's an actual backed, commodity-backed cryptocurrency. Again, I'm still skeptical of any commodity-backed cryptocurrency. It just, there is no fail-safe with those types of arrangements, in my opinion. But you guys let me know, is this an important high watermark moment in crypto or sovereign countries using cryptos? I think so. Even though it may not be much of a success, I still think this is definitely something to bookmark and remember, as it will set the precedent for things to come in the future with other countries. So that's pretty much it. You guys got to let me know what you think. Make sure you guys like and subscribe. All that good stuff. It's your boy Crypto Blood, and I'm out. Holla.
Now who ain't throwing